You know, sometimes the biggest stories in economics aren't the ones grabbing all the headlines. They're actually hidden deep inside the data. Today, we're going to dig into India's latest trade numbers, because they reveal a sudden shock and an even more surprising story of resilience. So let's dive in.
So, picture this. One of your biggest trade partners slaps on a new tariff out of nowhere and a key export number just tanks. That's pretty much exactly what happened to India. So, the first question on everyone's mind was, naturally, is this the start of a major crisis for their economy?
Okay, to figure that out, we first have to unpack the initial shock to the system. And it all kicks off with a sudden, really sharp downturn in trade with one of India's most important partners, the United States.
And believe me, when I say sudden, I mean really fast. Just look at this timeline. In August of 2025, everything looks good. Exports to the US are growing. Then, bam! August 27th, the new tariff hits. By September, the entire trend is completely flipped on its head. So what caused this massive reversal? Well, it was a new 25% additional tariff on Indian imports. And to put that into perspective, this wasn't just some small tweak. It basically doubled the duties on these goods, pushing the total all the way up to a whopping 50%.
And the impact was, well, immediate and pretty dramatic. That one policy change led to an almost 12% drop in India's merchandise exports to the US in a single month. That's a huge hit for any economy.
The whiplash is just stunning when you see it like this. In August, things were chugging along with healthy 7% growth. Just 1 month later, the whole situation swings by nearly 20 percentage points into the red. I mean, talk about a complete jarring reversal.
But, and this is a really big but, the story doesn't stop there, not even close. To get the full picture, we have to look beyond the United States. Let's get to the other side of this tale.
And this is where things get super interesting. A report from the company Crystal uncovered the counter-narrative. They found that while U.S. shipments were falling, shipments to other countries, and I'm quoting them here, surpassed past growth figures. Now that is the crucial pivot in this whole story.
Just look at this split, it's wild. On one side, you have the US market down almost 12%, but then you look at the rest of the world, and exports there actually grew by nearly 11%. It's almost a perfect mirror image. We're talking night and day. And this wasn't just, simple growth. It was accelerating growth. Back in August, exports to these other markets were already growing at a solid 6.6%. By September, that pace had almost doubled to 10.9%. So the message here is pretty clear, right? Other markets didn't just pick up the slack, they stepped up in a massive way. Okay, so we've got a negative shock on one hand and a really positive pivot on the other. But what does this all mean for the big picture, for the whole economy? Well, this brings us to India's economic safety net and why the overall outlook is still pretty stable despite all this turbulence. Now, to really get that stability, we have to talk about something called the current account deficit, or CAD for short. The easiest way to think about it is like a country's bank account with the rest of the world. If you're importing a lot more than you're exporting, your account goes into the red, and a big deficit can be a serious warning sign. But here's the thing. India's CAD is not a sign of trouble. The forecast actually puts it at around just 1% of the country's entire GDP. For an economy of India's size, that is widely considered to be a very healthy and totally manageable level. So you're probably wondering, how can the big picture be so stable when there's this big trade shock happening? Well, it all comes down to a powerful economic safety net that has 3 key parts. First, strong service exports. We're talking software, IT support, that kind of thing, which aren't hit by this specific tariff. Second, you have steady remittances, which is money sent home from Indians working all over the world. And finally, lower global oil prices are helping to keep the country's import bill down. You put those 3 together, and you've got a really powerful buffer.
So, what's the big takeaway from all of this? When you boil it all down, it's a really powerful story about economic resilience in a world that's, well, always changing.
Look, it really all boils down to this. The new U.S. tariff? It caused a sharp drop in those exports, no question. But at the same time, this strong growth in non-U.S. markets, all thanks to diversification, acted as a fantastic counterbalance. And the net result for the overall economy? A stable outlook, all because that critical CAD number stays under control. It's a classic story. You've got a problem, a pivot, and a stable outcome.
And that leaves us with a pretty fascinating question for the future, doesn't it? We've seen exactly how diversification helped cushion a major trade shock in this one case.
But on a much larger scale, can this strategy of spreading your bets really truly shield an entire economy from the high-stakes politics between global superpowers? It's definitely something to think about.